Amazon, Virgin Media, and Disney have all used penetration pricing to establish a foothold in new markets. So, what exactly is penetration pricing? Simply put, it's when a business sets its initial price really low in order to gain market share and establish its brand. Imagine you're launching a new product and you want to gain market share as quickly as possible. You could offer a low introductory price just to get customers using your product or service and make it easier for them to try it out and become interested in the product. Once you've then built that base of customers, you then gradually increase the price as they become loyal to the brand. In 2020, Disney entered the crowded UK streaming market with its own platform, Disney Plus. At this point, it had a 0% market share and was competing against major players like Netflix and Amazon Prime that were already dominating the market. Disney needed a way to stand out and get new subscribers. One way they did this was with penetration pricing. By offering a low monthly fee of $5.99 along with a free trial, Disney Plus aimed to draw in as many customers as possible with a more attractive deal than its competitors such as Netflix, who at the time charged $8.99 a month, and Amazon Prime, who charged $7.99 a month. This pricing strategy allowed Disney Plus to gain a foothold in the market and attract new customers to its platform, setting itself up to turn those new customers into long-term loyal customers. After the successful launch of Disney Plus using penetration pricing, the company shifted their strategy and gradually began raising their prices, first to $7.99 a month and now an expected rise in 2023 to $10.99 a month, making their prices much more closely matched to those of their competitors. Disney Plus is now hoping that the quality of their content is good enough to retain those initial customers at this new higher price point, making the business more profit per subscriber. Sounds easy, but there's a few things to keep in mind when using penetration pricing. Firstly, you need to have a clear understanding of your target market and their price sensitivity. If your target market is more price sensitive, then they're likely to jump ship when you start to begin raising those prices, making them more likely to switch to one of your competitors. Secondly, you need to have a plan in place of how you're going to eventually start raising those prices. You don't want to be stuck in a low price trap forever. And in Disney's case, they needed to provide quality content to ensure subscribers continue to subscribe once prices begin to rise, as customers still valued the service once the penetration pricing strategy had disappeared. But why do companies use penetration pricing? Well, a study by Accenture found that companies using penetration pricing saw 2.5 times faster growth in market share compared to those that didn't use that pricing strategy. And another study by McKinsey & Co revealed that penetration pricing led to 8% sales growth and 7% higher customer retention. These numbers show how powerful penetration pricing can be at helping a business gain market share and establishing a brand in such a competitive market.